Welcome everybody to the Damien channel. Today in today's video, we're going to be doing the weekly stock market chart update analysis for some stocks that actually reported earnings this week. We're going to be talking about Airbnb, Redfin, Axon, Wynn Resorts, and and also Marriott International. Okay, those companies reported earnings. I thought it was worth talking about today. We'll also be talking about some of the some other stocks. If you guys have any particular requests out there for a particular stock you want me to look at, we'll look at whatever news is affecting that stock, and then we'll also look at the charts. But we're gonna get started here with Airbnb first. Okay, Airbnb reported earnings yesterday, last night, on Thursday night, and they actually had a miss. Okay, Airbnb's earnings, they missed on earnings, but they were able to get a revenue beat. Okay, and it says right here in this article from CNBC that Airbnb reported third quarter earnings that missed analysts' expectations. The company reported $3.7 billion in revenue, up 10% year over year. But Airbnb said in a letter to shareholders that it's focused on expanding beyond its core markets. All right. So whatever that means as far as its core markets, I think they're talking about expanding international operations here. But you guys can listen to the earnings call if you really want to get into it. We're just going to look at the numbers here, and then we're going to look at the chart and try to figure out where the price might go for Airbnb. But yeah, earnings per share, they came at $2.13 versus $2.14 was expected. Revenue came in at $3.73 billion versus $3.72 billion. The company did note that a $2.8 billion tax benefit during the third quarter of 2023 affected their earnings in prior quarter from a year ago. Okay. The company expects to report revenue between 2.39 billion and 2.4 billion during its fourth quarter. Okay, so it looks like revenue is going to be coming down here. Okay, so revenue for this third quarter that they had was about 3.7 billion. They're now saying that they're expecting revenue for the fourth quarter to be between 2.3 and 2.4 billion. That's about $1 billion less than what they made in the third quarter. That could be due to seasonality. Maybe not that many people taking vacations during the winter time. Summer, I believe, is more popular for Airbnbs. More people are traveling during the summertime, so that's probably seasonally expected. Okay. In a letter to shareholders, the Airbnb did say that it's focused on expanding beyond its core markets and into underpenetrated markets around the globe. So like I said earlier, they're going to try to expand their international operations here. The average growth rate of nights booked in Airbnb's expansion markets was double that of its core markets on an origin basis during the third quarter, the company said. Will remain focused on accelerating growth while preparing for Airbnb's next chapter, which will take us beyond accommodations. You'll see more of this next year. I believe that's what the CEO said. Airbnb said that adjusted EBITDA for the third quarter was $2 billion, up 7% year over year. Analysts were expecting 1.86 billion. So they are slightly beating expectations on their earnings over what they did prior to what they did last year. You guys can read the rest of this article on CNBC if you feel like I missed anything, but we're gonna go into the chart and try to get ideas like what Airbnb might be seeing next in their chart here. Okay, so I'm gonna take you guys over to TradingView here. TradingView has a lot of information here. Let me clean this chart up a little bit. This might be a little bit intimidating for some of you guys. I did do some previous chart work looking at Airbnb earlier, but you can see that Airbnb is $134.61. If you look above my head, you can see $134.61 was where Airbnb closed out this Friday, November 8th, 2024. And I'm looking at the day chart, the daily chart. You can see that letter D here. Every candle, this is a candlestick chart. Every candle represents a day. And you know, it looks like, as I zoom in here, Airbnb had a really good day on Thursday, right before they reported their earnings. They were up 4.5% for the day. They started at $141. They closed the day at $147. And I think that had a lot to do with all the enthusiasm from Donald Trump getting elected president. Sent all stocks up on Wednesday and Thursday. And Airbnb was a benefactor for that temporarily. But after they reported their earnings, Airbnb then opened up on Friday this morning at $134. So that's a $15 haircut. Okay, about almost like a 10% drop in price. So Airbnb investors, they didn't really get they didn't really have a good morning today. After they reported earnings last night. And the earnings were just below expectations, nothing remarkable. That's why Airbnb stock went back down, basically where it was trading at earlier this week. It's been trading at the $130 level, the low 130s for this past week. Airbnb did have look like a bottom out here around like the end of August. You could have got some Airbnb for like $115. $115 per share. And I think if I zoom out a little bit long, yeah, $115. Like I believe Airbnb, they IPO'd right here in 2021, or sorry, December of 2020. They IPO'd at like $140. So getting it for dollars in August of a few months ago, was a pretty good deal to be at. And we're just looking at and I have this yellow trend line that I drew out. Airbnb did get to its lowest point back in December of 2022, where we saw Airbnb as low as $83 here. Okay, I believe the stock market, a lot of stocks were doing bad towards the end of 2022. We had basically a recession in 2022. Let's not forget that, guys. We had a recession, even though the Biden administration didn't want to admit to it, and they want to change the definition of what a recession is. We actually had a bad 6 months. The first 6 months of 2022 was bad, and that caused stocks to go down. So it wasn't just Airbnb, but Airbnb did bottom out here at like $83 in December of 2022, and it's been respecting this trend line. So when it came down in price in August, I'm not sure why that's the case. I haven't really been following Airbnb stock like that, but whatever bad news was out there sent the stock down, and it respected this supply line here. Okay, so why I drew this supply line here is because in the future, if Airbnb does decide to go down for whatever reason, whatever bad news might come next, because we really don't know what the bad news is going to be, I expect Airbnb to respect the supply line here. Okay, the supply line is just basically, it's a normal tendency for the stock to not go below that price, because investors see that as a value area, and an area where they would like to defend. Chartists, people like myself who follow the charts, we pay attention to these things to get an idea as like where price might go and how low it might go. If Airbnb decides to go below this trend line, okay, for whatever reason, if we go down here and we don't get a bounce back and it breaks through that supply line, then I'd be bearish on Airbnb. I would start selling some of my Airbnb. If I wanted to get into something else, I would possibly short sell Airbnb if that's the case, if it breaks this supply line. And if I was still bullish on Airbnb, then yeah, below the supply line is probably going to be some good areas to buy Airbnb. I can see, like, looking at some previous support zone here, if you can get Airbnb for like $103, $105, that seems to be a good area to buy Airbnb. But I'm expecting Airbnb to defend itself. I don't expect Airbnb to go below $120, to be honest with you. Yeah, and if I pull out some of the moving averages here, let me just get rid of this little drawing that I made. If I pull out some of the moving averages here, these red, white, blue, green lines here, okay, You can see that Airbnb has been trying to defend the 100-day moving average, which is this light blue line here. That's the 100-day moving average. That's currently at $132.60. If Airbnb goes below that, it does have some more support here from that green line, which is the 50-day moving average. And that's currently trading at $128.18. So maybe you can scoop up. You could probably get some better deals on Airbnb at like the $128, $130 level. If Airbnb goes below that, those support areas, then I'm expecting Airbnb to do a sharp drop down to like the $120, $115 area, where we have some support here, and more support, price support here area at the $115 level. Okay, so if you're looking to scoop up some cheaper Airbnb shares out there, I would put $115 as my long-term price target. Try to scoop up, put some limit orders on there to get some Airbnb at $115 temporarily. If you're short trading, if you're trading it in a shorter term time frame, if you're day trading it, maybe you could try to buy Airbnb at like $130, $128. Okay. But I think that's as low as I could see Airbnb price go. If they report better earnings, then we could see a more bullish case for Airbnb, where it can get back up to where it was earlier in like May and July of this year, where we saw Airbnb at like $160 per share. Okay, so that's my analysis on Airbnb. We're gonna now move on to Redfin. Okay, Redfin. Once again, another real estate play here. Kind of talking about real estate stocks here. I mean, we're also going to be talking about Wynn and Marriott, which is also kind of like real estate play, but also kind of like the tourism industry as well. Redfin is more of a real estate play. So we're going to look at Redfin right now. Okay. But yeah, this is pretty much like a real estate stock market video that we're doing here. So yeah, Redfin reported earnings here, and they also reported a bad quarter. The third quarter was a loss. They missed revenue estimates. Okay, Redfin came out with a quarterly loss of 28 cents per share versus the Zacks estimate of a loss of 20 cents. So they lost more money than they were planning on losing. This compares to a loss of only 17 cents per share a year ago. So not sure what's really going on with Redfin, but their earnings are not looking so good, if you ask me, because they've been losing money since last year. I haven't really been following the stock. I've been more into like the technology stocks myself. I like the technology stocks for their high growth. But some of these stocks that I've been losing money and getting beaten up, like Airbnb and Redfin, they might be some value plays here where you can actually get in while everybody is like abandoning them, and you can get them at dirt cheap prices. And then when the economy starts to improve again, hopefully going into next year, you can sell your Redfin and your Airbnb for higher prices here. Okay, going into next year, that's how you make money: buy low, sell high, right? But yeah, I mean, you can look more into the earnings statement and the news about Redfin. We're gonna get into the chart now, okay, and we're gonna see where Redfin might be going for its price here. Look at Redfin over at on TradingView here, okay. Redfin, okay. Redfin currently trading at $9.67. You can see that right above my head. $9.67 was the last trade that it made on the NASDAQ here. And I'm looking at the charts here, and I can already see a pattern here. Redfin was starting to make higher highs and higher lows, higher high, another higher low here, another higher high. And it got as high as looks like as high as $15 towards the middle of September 18th here. And that was it. I think that was the high for the year. Redfin was higher about a year ago in July of 2023 when it was trading at like $16. Okay. So Redfin looks like it peaked out here in September, and that's probably because we did get some bad news in August and September about jobs reports and jobs, people losing their jobs. And if people are losing their jobs, that probably means they're not going to be buying homes on Redfin or using Redfin for their services to buy and sell a home, because they're going to be more worried about trying to find another job before they go out and buy a house. Sorry there, guys. I had to get a drink of water. But yeah, so what Redfin I see is doing is it's creating a descending triangle. And I'll show that to you and draw it out here real quick for you guys. You know, we have this level here. It looks like Redfin will defend the $9.40 area as best as it can. Okay. So that would be the demand line. Okay. And the supply line here looks like Redfin is basically creating this descending triangle. Okay. I got one touch here, two touch here. And the way that descending triangles usually break out is they usually break out to the downside, especially if it's already in a downtrend. But the thing that kind of messes things up here a little bit is Redfin did enter into this triangle on the upside. Okay. This was an uptrend. Okay. So there's a chance that if Redfin gets its act together, it could break out to the upside. Okay. And if Redfin does break out to the upside, all right, what we then have to do here is we draw a line from the top of that triangle to the bottom of the descending triangle, and we get the measured move. Okay. And then we put it to where we think Redfin could break out. If Redfin breaks out over here, towards the end of this triangle, okay, we could see Redfin get as high as, once again, we can see Redfin get up to like $16 again, okay? And right now you can buy it for like less than $10. So that's about roughly a 50% move up in price. However, the downside of that is, and like I said, you know, these descending triangles usually break out to the downside. If Redfin, for some reason, gets some more bad news here, highly unlikely, but we have a price target of like $3 here. That blue number right over there, $3.20. The measured move, if we break down and continue going down further, we could see Redfin get down to like $3.50. And that's like a 66% haircut. You know, these are just estimates. These are just probabilities. There's nothing that says that it has to go down to $3. We're just trying to plan the worst case scenario based on the charts and what the charts are saying. And the charts are saying that if we continue on in this descending triangle, we actually do the expected measured move down, we could go down to $3.50. And that kind of makes sense because we have seen Redfin back in like November of 2022. We've seen Redfin get as low as like $3.60. So $3.50 makes sense. I would expect that if Redfin was to go down to $3.50, it's because we're in a recession. It's because we're losing jobs. People can't buy homes. And for whatever reason, people aren't able to sell homes, and Redfin is not able to collect the commission for helping people buy and sell houses without real estate agents, because they act like a third party that's able to do real estate services. And I believe that's how they make most of their money. Okay. Besides doing advertising and having their website with advertising. Okay. So that is the bullish and bearish case on Redfin. Just looking at the charts here, guys. I hope that gives you an idea as to like where Redfin might go next. Okay. So we're either looking at a recession, sends it down to $3. If we have the good old times, if the good old times going to keep on rolling, then we can see Redfin get back up to $16, hopefully next year. Okay. Hey, Darren, I'm glad to see that you made it into the chat. Go ahead and click that like button if you're enjoying the analysis here. And if you have any stocks you want me to go over, put in your requests in the live chat, and I'll go ahead and add that into the stocks that I plan on talking about today. I believe we got like 3 more stocks I want to talk about here. And if you got some more requests, I can take them towards the end of the video. If you guys are also new to the channel, please go ahead and subscribe so you can get more weekly updates here about stocks. And we can talk about stocks on Fridays here. I've been talking mostly about crypto in a lot of my videos because It is very exciting times for crypto, but I am trying to cater to my audience that likes stocks and talking about the traditional markets like gold and silver and oil and stock markets. Even we can talk about bonds too if you want. We're gonna focus on some of the stocks that reported earnings, the more notable ones, the popular ones out there, the ones that are household names out there. Uh, and If you have a particular stock you want me to talk about, you can put that in the live chat. And guys, if you're on my crypto analysis videos, you can also ask me about stocks when we're talking about crypto. This is the Meet Damien channel. It's not the crypto channel, the crypto Damien channel, or the stock market channel Damien or whatever. We talk about everything and anything that interests us in finance and business and how to make money. And that's what I want to do here. And of course, you guys are meeting Damien. I am Damien. All right. We're gonna continue on here and talk about Axon. Okay, Axon actually had a pretty good week here, and we're gonna look at that. We're gonna find out why Axon had a pretty good week here, because they actually reported some good earnings here. So let me show you what happened with Axon today, guys. Axon Enterprise stock soared to an all-time high today. Okay, according to the Motley Fool. Okay. And let's just read up on why that's the case. So shares, they're saying that shares of law enforcement technology company Axon soared on Friday, November 8th, after the company delivered strong financial results for the third quarter of 2024. As of 10 a.m. Eastern time, Axon stock was up 13% and had an all-time high of about $550 per share. Okay, so this is going to be interesting to look at in the charts here, guys. I'm going to try to give you guys some price targets. It gets a little bit tough when a stock is near its all-time high, because then we have to use a Fibonacci extension to find out where it might go next. And then we can look at the RSI to see how overheated it might be. And if it's not overheated, then there might be some more room for the stock to go higher. Let's continue reading about this. So we finally got some good news on a stock here. The other two were reporting not so good earnings, or nothing special. Axon's growth and profits, they are soaring. They're saying here that the TASERs have been around for some time, so one wouldn't expect Axon to be a high growth company at this point. But by expanding into new verticals and product offerings, the company has strung together 11 consecutive quarters of greater than 25% growth, with Q3 revenue up 32% year over year to $544 million. Wow. Okay, so this stock is worth taking a look at and maybe considering adding to your portfolio if you want to get into law enforcement stocks here. Okay. In defense spending, maybe they might have something going on with the military. I don't know. Axon's Q3 revenue was better than expected, and its profits were too. Many investors were impressed by its adjusted earnings before taxes, the EBITDA. Okay, so for those of you who don't know, when they say earnings before interest, taxes, depreciation, and amortization, that's called EBITDA. Okay, I know some of my listeners and viewers are new to the stock market, or they don't really pay attention, or they're trying to learn more about the stock market. And EBITDA is a very popular term, okay? And it's just a acronym for earnings, interest, taxes, depreciation, and amortization, which was up 54% to $145 million. Okay, so they're making money. We like companies that make money, so that means we can make money. All right, so with Q3 ahead of expectation, Axon's management raises full year guidance, so that's good. When a company raises guidance, that means they're expecting to make more money than what they said a year ago or even a few months ago. Okay, so they're expecting to make even more money. Previously, they guided for full year 2024 revenue of $2 billion to anywhere between $2.05 billion, along with an EBITDA of $460 million to $475 million, but it raised its revenue now to $2.07 billion. Okay, so slightly above. And it's EBITDA guidance is going to be about $510 million. So, okay, I'm expecting to make a little bit more money. Okay, that's cool. The beat and raise is what sent Axon stock to an all-time high. Okay. The company's long-term outlook is bright. One of the great things about Axon's business. Okay, so now we get to learn more about this company. Okay. Axon's best is that investors have much than average investors have better than average visibility into the future. Much of its revenue is reoccurring in law enforcement agencies that are signing long-term contracts. Okay, so this is a pretty solid company that has a pretty solid revenue stream, selling their products to police agencies all around the country, I'm assuming here. Looking at its metrics, paints an optimistic picture for Axon shareholders. Its Q3 is annual recurring revenue. It hit $885, which was up 36% year over year. I believe they meant to say maybe $885 million. Okay, I think they forgot to put the million in there. But yeah, I mean, you guys should look into Axon and learn more about the company. I'm a little bit intrigued myself, but let's look at the stock to see what we can gather and where price might go next with Axon. Okay, we're gonna look back here at TradingView, and here's Axon trading on the Nasdaq. Okay, very interesting chart. I like it when I see these things pop off and make new all-time highs. But you can see it right there. So like right above my head is the price of Axon. It went even further up than what that news article was talking about. It actually went up to $603.18 here. It went up 28%. It went up $134 in one day. Okay, the stock was trading at like what, $450 on Wednesday, and then what, $470 on Thursday. So this stock was a $470 stock. It became a $600 stock a day. Oh, wow. Okay. Light the rockets. Woo. Okay. We like that. Okay. Well, we would have liked it if we were invested in. I actually don't own Axon stock. Full disclaimer. So you could take my opinion for what it's worth. Might be worth a little bit more because since I don't have any interest in the stock, but still an exciting stock to talk about because it had a pretty good day. Congratulations to Axon investors out there. Yeah, so that's what the daily candle looks like. So we have basically shot up, we gapped up. Gaps usually like to be filled, so don't be surprised if Axon does come back down here somewhere in the near term future or the later future, and it actually comes down to that price of like $450, $60. We'll have to see how Axon does on Monday and Tuesday of next week to give us an idea as like whether it can sustain those levels or if it's going to start coming down to lower levels here. But I did say I was going to look at the RSI here for you guys, and then we'll also do a Fibonacci extension to kind of understand like where it might go next. Okay. But the RSI is very overheated on the stock. We have a 90 RSI and anything above 70. Okay, so you see that red number there. All right, the red number on the RSI. Hope you guys know what I'm talking about, like this red number right here. That red number is 90.53. Anything above 70 is considered overbought. So the overbought level is usually at 70, right over in this area. So that leads me to believe that we might come down a little bit probably on Monday once the animal spirits and the enthusiasm and excitement and the euphoria goes away. Some of these investors are going to probably start selling their stock on Monday. Unless the price keeps going up, and then they'll definitely be selling if the price goes up still. Like, so I'm expecting some volatile action here on Monday for Axon. Just looking at the daily chart. And then looking at the MACD, you can see it got this big giant green candle. That's also very interesting because it was painting some red candles here. So the selling pressure is gone, and you can see the selling pressure is very much gone right now. Okay. And we'll have to see how the green candles start coming here. We might start trending back down like we did right here and then go back into red again. And then maybe that might be where you can scoop up Axon at a decent normal price. You know, guys, we gapped up here. Don't be surprised if Axon does come back down to $450, $460 again to retest those levels before going up to higher prices. I would put my limit orders in at like 430, 450, 460, try to scoop up some Axon if I'm a long-term investor. I'd be careful trying to buy the stock right now because it is overheated on the daily chart. I'll go over to the weekly chart to see if it's overheated on the weekly, and it might be, or it might start getting there. And okay, yep, all right. Axon is also overheated on the weekly RSI here. It has an 86.25 is the red number there for the RSI. Okay, so that's overbought, and it's been overbought since the first week of September. We've had some RSIs of like 70 over here and 75, 80. Now we're at 86. Okay, so the move might have been made here. People might have already known about the people who are already involved in Axon. They already pushed the price up already. You might have missed out on this stock. Okay. But like I said, if it comes back down again, maybe you can try scooping it up at like 400, 430, 450. I'll quickly do a Fibonacci extension here to give you an idea of like how far it might go. Okay. And this is going to be interesting. I'm trying to figure out where the corrective move might be on this stock. All right. So we're going to measure here from like June 2022. Okay. So I'm going to do the Fibonacci extension. This is going to help us figure out how high this stock could possibly go if it continues going higher. We'll do the corrective move from here and then just coming down right down there. Okay. Yep. Okay. So looking at this stock, we have this rainbow colored chart. That's the Fibonacci extension tool. And what we're looking at here is I see the Fib node here of 1.382 showing that this stock could go up to $612 as its next price target. So right now, it being at 603, it's very close to getting to that price target of 612. That would be another good area for you guys to start selling Axon if you already have Axon. And put that as my next price target. Don't get too greedy. If for some reason we are greedy and animal spirits do push the stock up a little bit higher, then the next Fibonacci extension level is 1.618. And it looks like $670 will be the next price target for this stock if we go higher. Okay. And then if this stock, the longer term target for the stock is if we get to just the 2.0 extension level, and that price target is $762 for Axon. And then it gets a little bit more ridiculous. If we somehow make it up to the 4.23 level, then we're looking at like a $1,300 stock here. Yeah, that's if they can double or triple their revenue in a short period of time. Then yeah, they'll definitely see those kind of levels. But I'm expecting near-term price target $612 on Axon, and then maybe a longer term target $670 as the bullish case for Axon. So go look out there trading and investing in Axon. You guys might want to do some more research on that stock. I don't have that stock, but maybe I might consider buying some in the future. All right. So we're gonna move on to Wynn Resorts. See if anybody no requests in the charts here. So we'll move on to Wynn Resorts. Wynn Resort. Another stock that missed earnings, unfortunately. And this is coming from Simply Wall Street is reporting the results here, and they're saying that the revenue for Wynn came at $1.69 billion, up 1.3% from a year ago. It had a net loss of $32 million, which is a loss that was narrowed by 73% from the third quarter a year ago. They had a 29-cent loss per share, which is an improvement from the $1.03 loss that they had a year ago. So yeah, it looks like Wynn is getting their earnings and revenue back in shape again here. They're saying here that the revenue missed analyst estimates by 2%. The earning per share was also behind analyst expectations. Looking ahead, the revenue is forecast to grow 3.6% on average during the next 3 years, compared to a 9.6% growth forecast for the hospitality industry in the U.S. So looks like their growth is not going to be as high as what the rest of their industry is going to be doing. That's interesting. The company shares are down about 13% from a week ago. Oh boy. Okay. But they're doing their analysis here, and they're saying that Wynn could possibly be undervalued here, with a 6-factor valuation analysis that indicates a potential opportunity, and that's why we're looking at this stock, okay? Because we want to see if we can buy low, if it's low right now, and sell high in the future, right? That's how you make money, right? Buy low, sell high. Okay. So let's take a look at the chart, okay? So we're looking at Wynn Resorts on the NASDAQ here on the TradingView chart. And you can see that Wynn is currently trading at $84.30 here. And yeah, it did have a bad week here. It's down 11, almost 12% this week, okay? Basically canceling out all the moves that it made back in September. Wow. All right. So we're looking here at the weekly chart for Wynn. Trying to figure out what the next move might be here for Wynn. And we're looking at the weekly chart, trying to get the bird's eye view of where the stock might go next. Looks like Wynn has had some good years prior, back in 2014, and also had some good years in 2018. So that gives me somewhat of an idea as I analyze this. I don't really look at Wynn Resorts, so this chart is new to me, and I'm just getting familiar with it just now. But I do see a downward trend right now on the prices here. We're making lower highs, lower highs, lower highs ever since January of 2020. Wynn's stock price has been going down. Okay, it looks like here it had its worst price when COVID-19 hit in March of 2020. We've seen Wynn get as low as $35.80. Okay, and then of course with the revenge travel and people wanting to travel back in 2021, we saw Wynn then shoot back up to like $143 in March of 2021 with that revenge travel and people spending all their stimulus checks. And then, of course, we had a downward trend going into 2022 and we had a recession. So this stock has seen it all ups and downs here in the hospitality industry, the gambling industry, okay? But what I'm seeing here is we can start to make a trend line here, and we have a demand line here for Wynn, okay? And yeah, I see some resolution here coming for like the beginning of 2026, okay? Wynn's gonna have to make a decision, yay or nay, red or black, or in this case, red or green. Okay, are we going up or are we going down? With a symmetrical triangle, it can go either way, 50-50. Okay, but we take the measure move of the symmetrical triangle, which is from the top of the triangle to the bottom. And if Wynn is going to be bullish in the future here, and we get a breakout like somewhere over here at the $84 level, which is where we're at currently right now, we could see Wynn get as high as $213 in the future at some point. Okay, but if Wynn decides to break down, oh my god, yeah, I mean, that's what, a negative number. it could go bankrupt. If that's the case, yeah, you could lose all your money with Wynn. Okay, that wouldn't be really winning with Wynn. Okay, if it does that. I think a more realistic target, if Wynn was to go down to lower prices here, we see some price support area where it got low down in like April, May, and June of 2022. I see like the $60 level being a price support area that it will try to defend. And then we have seen some lows here like near $50. So $50 or $60 is probably a good area to be buying Wynn if you're bullish on Wynn. Okay. If you're bearish on Wynn, you're probably already short selling it and you're making money this week, and you've been making money the last few weeks here. I wouldn't get too greedy because we also have another price support area here at like the $75 level that we made back in July and August of this year. So you might have like $10 more to go down before you're going to be taking profits on your short with a win. You don't want to get too greedy here because this thing will bounce up and down, up and down, up and down until we get some resolution and we actually get out of this symmetrical triangle that we've been making since 2020. Okay. I'll turn on the moving averages real quick just to see what's going on here. If there's any support. And you can see that this white line is the 21 exponential moving average. You'll see that with the white line, the price always stays near the white line for the most part. And we got above the white line back in like September, only for us to then come back down to the white line again. And that's showing that win should be about $86.84. And that's pretty much where it's at right now at $84.30. So I would expect win to try to trade sideways for a little bit here at the $84, $86 level. And if it wants to go lower, then maybe you can scoop up some win at like $75, $76. But I wouldn't really try my luck if I was a short because win already had its beat down here. Let's just look at the monthly chart real quick, see how bad of a month it's had. Yeah, win is about down 12% in the month of November. And we have a shooting star candle here on October. But yeah, win had a really good month in September, up 24%. And now it's losing back some of those gains that it made. And we got those gains. Those gains back in September are getting cut in half right now. So yeah, that's my analysis on win. You know, you could scoop some up at like $75, maybe $60 if it decides to go down to that price. And expected target for win is like I believe like $200 like we said earlier. You could probably double your money right now with win. You could also probably triple your money if you're able to scoop it up at like $60 with $180, $200 price target. And we'll move on to one last stock here. We're going to talk about Marriott International, which is also a here. We have Marriott reporting earnings for Q3 2024. Marriott says that they announced their financial results for the third quarter of 2024, reporting an increase in revenue and adjusted profits. So actually had a decent quarter. Okay. The company's total revenue increased 6% year over year to $6.26 billion in the third quarter, reflecting growth across all operating segments. Comparable system-wide constant dollar revenue per available room increased 3% year over year worldwide, 2.1% in the U.S. and Canada, and 5.4% in international markets. So looks like Wynn's having some better results in their international markets versus the U.S. and Canada. Third quarter earnings per share came in at $2.07 on a reported basis compared to $2.51 about a year ago. Okay, so they're not making as much on their earnings as they were a year ago. On an adjusted basis, earnings increased to $2.26 per share in Q3 from the $2.11 in the prior year. Okay. All right, so that's interesting. So maybe they are actually on an adjusted basis. They actually are earning more money than they did last year. Okay. On a reported basis, the net income was $584 million in September compared to $752 million a year ago. Interesting. So I don't know what they're doing with their earnings. But they seemed like they made more money last year, but they must have done some accounting stuff to make it look like they earn more money this year. So we'll take a look at the chart and see what investors are thinking about that about this quarter here for Wynn and for Marriott. Yeah, we're talking about Marriott here. And yeah, let's go over to TradingView, see what could happen next for Marriott here. Oh, wow. Marriott on the monthly chart looks pretty good, actually. Their stock finished the day at $280 on Friday, November 8th, 2024. Up about 1%, up about $3. And this is a pretty solid chart, guys, here, okay? With the price being $280, we have the moving average here. So the red line is the 200 moving average. The blue line is the 100 moving average. The green line is the 100. I'm sorry. The green line is the 50 moving average, and the white line is the 21 exponential moving average. Okay, and you want your stock or whatever asset you're in to have a chart like this. You want the white line to be above the green, and the green to be above the blue, and the blue to be above red, because that means you're in an uptrend. Okay, and things are looking good. And you can see that, obviously, if I just remove the moving averages. I mean, look, it's up and to the right, up and to the right. Price is just going up and to the right. So this is a money-making stock here, guys. All right, all right. Let's we'll zoom in a little bit. We'll see how it is on the daily chart here. Yeah. So I believe, Marriott reported their earnings on Monday, or maybe it was Tuesday. But then it looks like it gapped up a little bit on Wednesday here, right after the election results. And we saw Marriott trading at like $259 is where it closed on Tuesday, and then it jumped up to like $270 and then continue up and closed at like $276 on Wednesday. So we've already seen a good move up on Marriott, and the trend is just up and to the right. I don't even have to draw a trend line. You can see that with your own two eyes that it's up and to the right here. Okay, but is it overbought? And I think the answer to that is yes. Okay. Marriott is the red number is 73.32. And we have Marriott in the overbought territory. So maybe you guys can wait for Animal Spirits to come down a little bit, and maybe you can scoop up some Marriott where it was trading at earlier in the week and last week at like $260, $250, because it did gap up, and gaps usually do like to get filled. So I'm expecting Marriott to fill that gap at some point. I would put some limit orders and try to scalp and try to scoop up shares at like $260 here, or $250, $255 maybe. You never know. You might actually get a deal. Because I don't see why Marriott would continue going up to higher prices here unless we get some more good news about the economy. I'd be more wary, because I've been hearing that jobs are people losing their jobs out there. So they might not be spending money to go on hotels and vacations like they did in years prior. And then, of course, you also have a new administration coming in that wants to crack down on the migration and immigrants being put in hotels like Marriott for temporary shelter. So that might cause Marriott to lose some money in the future, and you might actually see Marriott stock come down. And if you're still bullish on Marriott, then you can buy some, like I said, at like $250, $260 level. Guys, I would have to do we'll look at the weekly chart here for Marriott, but I'm gonna do a Fibonacci extension to get an idea as like how high Marriott could possibly go, because it's near all-time highs here. Yeah. Yeah. So we'll do the Fibonacci extension, and we'll get an idea as to like how high Marriott could possibly go here. So $46. Okay, I want $46. And we'll just bring it right up to here at like $260, $250 level. And then we'll do the corrective measure move down to like the $200 level. I'm just looking at the numbers here real quick. Make sure I get the right numbers. Yep, we'll say $204. And then that gives us the Fibonacci extension levels here, okay? And wow. Let me try to zoom in here. Looks like we have the 1.382 level for Marriott being about $503. That's crazy. That's almost like a double in price from where it is right now. That might be in the long-term future here, but it's saying that it could happen based on this fib extension. I see some other fib levels here. The 0.618 might be more likely. We might see $339 as a price target for Marriott International. Maybe the 0.786 at the $375.89. But yeah, $500 could be a possible price target for Marriott in the future. We'll see if the company can continue making money, and if so, yeah, you could double your money with Marriott somewhere in the future here. So I see a bright future for Marriott, and I see a bright future for anybody who's invested in the stock market and also crypto. Hey Eddie, good to see that you made it into the channel. But yeah, I'm gonna end the stream here, guys. Appreciate you guys coming on to the Meet Damien channel on analyzing stocks here. Like I said, we'll do this like every Friday evening. Take a look at some of the more newsworthy stocks out there that made the headlines, and see what's going on and where their stock price might go next, by looking at the charts as well and doing some chart work here. But yeah, my next live stream is going to be on Sunday night at 5 p.m. We're going to be talking about crypto for the most part, because that's like the only thing that's trading on a Sunday. So we'll see how crypto does. We'll see how Bitcoin does this weekend, and we'll talk about that and the other cryptos on Sunday. But yeah, I appreciate you guys coming out to this channel. Go ahead and smash that like button, click that like button. And if you're new to the channel, please go ahead and subscribe to the channel and click the notification bell so you know when I go live again, and you can get on board and talk about stocks and learn more about stocks and learn more about crypto. If you're interested in crypto, we talk about that as well on this channel. Okay. But yeah, guys, that's going to be it for this live stream. I appreciate you guys coming out to the channel, and good luck trading and investing out there. And I'll see you guys on the next live stream on the Meet Damien channel.